Hello, Cameron here. Just making another video, talk about financial markets. Not much has been going on recently, personally. Just been doing my summer internship and also just applying for jobs, really permanent ones. But yeah, this video starts off a bit more of a continuation from my previous video. But yeah, so let's get into it. So first thing I want to talk about is Fed raises rates by 0.75 points. So in my last video, I spoke about how I believe they were they were going to raise it by 0.75 points, but I could have seen it going up by just 1% as well. But in the end, they did go for 0.75 points, which then obviously, because I thought the expectation, so obviously the lower the interest rate increase, the better equity markets would perform, and because once it was definitive that it was 0.75 points, the markets actually rallied a bit on I think on the 27th. Yeah, so you can see that little rally there, and that was essentially because I believe that it was that the market thought that it was going to be, the likelihood was between those two, and once they got 75 basis points, it saw a little spike. But if we have a quick look at the futures across the board, not looking very good at the moment, quite red, but nothing major, nothing over sort of 1% declines, which sort of spells really high volatility in my head. However, something I want to look at is the figures over the last month. So S&P 500 has been doing absolutely brilliantly. I think this sort of goes with the fact, I mean, I'll get into this more a bit later, but after recessions, like equities perform actually really well in the period after recessions. And then we've got similar with the NASDAQ, actually 10.75% in the last month, which is actually pretty insane. But yeah, just a quick little update for those two. So getting more into the recession talk. So is the US in recession? So I mean, I was quite interested looking at this. So like, if you look here, it's fell 0.9% in the second quarter, and obviously because the midterms are coming up in the States, you've got Democrats saying, "Oh no, we're not in a recession," whereas you've got Republicans saying, "Oh yeah, we're definitely in recession." But I mean, aside from my political views, I definitely say that the definition of recession is two negative, or period of two or more quarters where there's a negative, or consecutive quarters where there's negative GDP growth, and that is what has happened. So the US, in my opinion, is definitely in recession. But yeah, next thing I wanted to look at, but yeah, sorry, I just completely agree with the data there, basically. Yeah, so something I did want to talk about is that I do believe the recession is over. Well, I mean, you can see by the S&P, I don't think it's going to come back down below the lows of, what was it? Yeah, 36.74. I don't think it's going to come back down there before the end of the year, to be honest. But yeah, I think the main reasons for that, or the main reason for that, is that there's the massive amount of household and corporate savings in the US economy. I think it was like $2 trillion above the average or something ridiculous. So like there's so much savings in that economy. I think it will be fine, and it sort of would be quite resistant to recession lasting 3 months, especially because it was only down 0.9%. It wasn't a major recession, or it hasn't been a major recession. So I do assume that it will bounce back. Next thing I wanted to talk about was just quickly touch a bit on oil. So crude oil's just trading just below 94. Hasn't been moving around too much, I don't think. Actually, it has. Sorry, but yes, no. So the main reason I wanted to talk about oil is basically just because of Cenovus, which is one of the stocks that which makes up a big part of my portfolio. So obviously you can see I had quite a rough month in June. So what is that, down? Yeah, down 20% or something like that. But I think it's just come up 20% from the lows now, actually, as well. But yeah, I think there's been quite a few energy companies that have just been recently declaring like extremely high profits. I know in the UK there's quite a few things going down about people wanting to like almost like strike against paying their energy bills. I can't remember what it's called. It's like boycott, I think. And I do think Cenovus will follow with that. I think you'll have to see, again, you have to see what Russia and Europe do with sort of cutting oil this winter. And obviously, if the supply is restricted, I expect oil prices to go up again. And obviously, that is brilliant for all the oil companies. It's just basically higher revenue for them. Finally, something I don't normally talk about, which is Apple. So obviously, Apple makes up quite a bit of the S&P 500, and it tends to be the way Apple moves. A lot of the tech companies move the same. And Apple came out with their quarterly report. So they beat on revenue and profit, and they actually said that they expect Q3 to be good despite pockets of softness, which I'm essentially interpreting as pockets of weakness. But yeah, so if we look at some of the statistics they've got, beat on earnings per share, although down year on year, beat on revenue, which is actually that's a lot of revenue, beat on, so actually there's quite a few things that are up year on year, especially considering we've just been in a recession. So like iPhone revenues are up, services revenues are up, obviously other products revenues down, things like Mac and iPad revenue are also down. But the gross margin's actually had quite a pop as well. Sort of is definitely sorting out, making it a bit stricter over at Apple. But yeah, so the main reason I'm talking about is that what Apple does, the other companies tend to drift towards as well, just because of how much it makes up of the S&P. But yeah, no, they do seem to be looking good. So I think that's. Oh yeah, there was actually one little point which I think I've just missed, which is alongside this political thing. I was actually looking at this was during the midweek, so I couldn't find the article title that it was, but I was looking at returns, like the S&P 500 returns during compared to political situations in the US, and it's actually returns are actually highest when there's I don't know what to call it. Basically, when somebody when there's two different parties both control bits of the government. So I don't know, the Democrats have got the president and the Republicans have got the House. That actually results in higher returns on the S&P, which I thought was quite interesting. And I was trying to think about why it could be, but I almost just think it's they've almost both got a stake. So they're both the economy needs to do well so that it looks good on us that we're doing our bit almost. But yeah, that was just some articles. You'll have to trust me on that one. I'm sorry, I couldn't find the article. But yeah, sorry if it seems a bit haphazardly. Just been doing revisions, not revision, interview prep for the last couple of days. So, but yeah, thank you very much for listening, and hope you enjoyed.